Good afternoon, my name's Craig Earl, I'm market analyst at ALPARI UK, and welcome to today's daily update on the markets. Today we're going to start by looking at the key economic data we've seen out so far, and that's looking at the second quarter US GDP figure, which came out at 1.5% as we expected. Now, the previous quarter's GDP figure was actually revised down from 2.2% to 1.9%, and that we weren't expecting, and it does just go on to show that the US economy is still being heavily affected by what's going on in the Eurozone, and it will put more attention on Ben Bernanke and the Fed on Wednesday when they have their meeting, in the hope that they are now going to embark on QE3 as many are expecting. But we do need to act with a bit of caution, because we've expected them to opt for further QE on many occasions in the past few months, and each time they have resisted, so it is going to be something to keep an eye on. In the markets, we have seen only a small reaction to any news out today. We saw a big reaction following Mario Draghi's comments yesterday, so the reaction today has been very muted. We've actually seen some things pull back, and the reason for this is we are expecting a lot of opposition, especially in Germany. I mean, we've already seen comments out from the Bundesbank today saying that they don't believe the ECB should be interfering in the bond markets. They don't believe that we should see an extension or the resumption of the securities markets program. They actually believe that the EFSF should be used to buy the bonds in the primary and secondary market in order to bring down yields. So they are definitely against the ECB intervention, which is what we were really expecting. We've also seen comments from the Bundesbank regarding the ECB policymakers' comments earlier in the week. Now, earlier in the week, we saw one ECB policymaker say that he personally believed that it was a good idea for the EFSM or the ESM to obtain a banking licence in order to get unlimited funding from the ECB. The Bundesbank have also opposed this, claiming that it would be fatal to the Eurozone, and it's actually not allowed as a result of Euro treaties. So again, more bad news for the Eurozone, because these are the things that investors have been clinging on to over the last few days, these comments by Mario Draghi and other ECB policymakers. So not good news, but it hasn't actually caused too much of a disruption in the markets, because people are waiting for Wednesday, are waiting to see if Mario Draghi does actually announce the resumption of this securities markets program. In the currency charts, we have seen the euro fall back slightly today against the dollar. It found resistance around 123 yesterday. We have seen it fall back slightly today, and we may see it fall a little bit further before the end of the day. People don't like to keep euro long positions open as we head into the weekend, with stories tend to come out over the weekend which can damage the euro and cause it to open lower on Monday. So people are likely to close out these long euro positions between now and the end of the day, so we could see it fall slightly lower. However, next week we're likely to see these euro gains actually extended as we move towards Wednesday, when we are expecting further talk of QE. In the cable charts, we've also seen sterling find strong resistance around 157. It has extended these gains today, and it has been trying to push above that 157 area. If it does push above 157, we will see it move towards around 157.69. However, one thing we are expecting to continue to trade in that wedge that it was threatening to break below earlier on this week. And like I say, with the Fed expected to talk about QE3 next week, we are likely to see these cable gains extended as we move towards Wednesday. Finally, in the equities market, we've seen stocks trading up around between 0 and 2%. The biggest gainer has been the FTSE MIB again. We've seen it suffer significant losses over the last couple of weeks, and we are expecting to see it continue to make these gains as we move towards Wednesday, especially if Mario Draghi does announce some more bond buys with the securities markets program. In the bond yields, we've seen the Spanish yields continue to fall. They're now falling back towards 6.9%. And we've seen the Italian yields fall back below 6%. Again, this is good news. We're back below the area at which the other three countries, Ireland, Portugal and Greece, all required a bailout. We are expecting to see these yields continue to fall. That's one asset that has continued to move in the same direction that it was yesterday. All this talk in the Eurozone with bond buying programs, or even the EFSF or the ESM buying bonds in the primary secondary market, which Angela Merkel and Francois Hollande are expected to discuss today. All this talk is positive for these bond yields, so it is now looking likely that Spain will not actually need a bailout over the next month or so. For now, though, that's all we've got time for. My name's Craig Earl, I'm market analyst at ALPARI UK. Thank you very much for joining us.